Now, I think we can all agree the highly anticipated approval of a spot Bitcoin exchange traded fund, otherwise known as an ETF by the United States Securities and Exchange Commission on January 2024, has changed the dynamic of things in the crypto space. It's something that the entire industry has been looking forward to for the past many years, and now that it's finally here, it's important to make a few critical clarifications. What's the better option? Is it to invest in Bitcoin ETFs or put your money directly into Bitcoin itself? Well, that's exactly what we're going to find out in this video. Now, after years of relentless efforts and numerous applications by various investment companies, the SEC finally gave the green light to 11 Bitcoin ETF applications. Exchange-traded funds, or ETFs, which they'll be referred to from now on, have long been a staple in traditional finance, representing baskets of assets or individual assets that trade on exchanges much like regular stocks. These versatile investment vehicles can track the prices of various assets, including securities, commodities, or even cryptocurrencies. In the context of Bitcoin, spot ETFs offer a conventional and respected avenue for gaining exposure to Bitcoin's price. Now, it's important to note that there exists a technical distinction between the ETF itself and the asset it tracks. While the ETF operates as a standalone product with its own market and independent trading, its price may differ from the net asset value of the underlying asset, which in this case is Bitcoin. So here are the key characteristics you should know about Bitcoin ETFs. 1. Trades on traditional exchanges. Bitcoin ETFs are traded on regulated exchanges such as the New York Stock Exchange, providing investors access to traditional financial markets, unlike cryptocurrency exchanges like Binance. 2. Non-ownership of underlying Bitcoin. Investing in a Bitcoin ETF does not grant ownership of the actual Bitcoin. It essentially represents a synthetic asset tracking Bitcoin's price, with the ETF shares being backed by Bitcoin held and managed by the ETF provider. 3. Acquisition fees. Various Bitcoin ETFs come with different fees determined by the provider. For instance, BlackRock's Bitcoin ETF, IBIT, imposes a sponsor fee of 0.25%. 4. Managed by ETF provider. ETFs are managed by the companies that launch them, allowing them to make decisions regarding support and fee changes. 5. Trading within traditional hours. ETFs adhere to traditional trading hours on regulated exchanges, limiting accessibility to regular US trading hours. 6. ETF and NAV price difference. Due to separate market dynamics, Bitcoin ETF prices may deviate from the Bitcoin price on the same day. Now, after understanding all of that, you're probably wanting to know exactly what the pros and cons of a Bitcoin ETF are, right? Well, let's start things on a positive note. The pros include regulated financial product. Thankfully, Bitcoin ETFs are regulated and backed by reputable providers like BlackRock. Inclusion in specialized portfolios, because they can be integrated into specialized portfolios such as retirement or 401k accounts. Reputable providers. Investors can rely on the reputation and reliability of well-known ETF providers. Now, the cons include non-ownership of Bitcoin. Investors don't possess the actual Bitcoin, missing out on certain benefits associated with direct ownership. Possible premiums. There might be a premium on the ETF compared to the Bitcoin NAV. Limited trading hours and higher fees. ETFs adhere to traditional trading hours and come with fees. Investing in Bitcoin directly? Okay, but how does that compare with investing in Bitcoin directly? Well, contrary to ETFs, purchasing Bitcoin directly grants you full ownership of the cryptocurrency, whether obtained through a cryptocurrency exchange or peer-to-peer transactions. However, it's essential to exercise caution and consider self-custody when using cryptocurrency exchanges. This means transferring your Bitcoin to a secure cold wallet, such as Trezor or Ledger, where you control the private keys. Now, in the crypto community, there's a well-known saying that exists: not your keys, not your Bitcoin. Owning your private keys adds a layer of security to your investment, safeguarding it from potential exchange vulnerabilities. So, let's summarize the specifics of buying Bitcoin directly. First, it trades on cryptocurrency exchanges. Bitcoin can only be purchased on cryptocurrency exchanges like Binance, which is outside of the US, or Coinbase if you're in the US. 2. Direct ownership of Bitcoin. When you buy Bitcoin on a cryptocurrency exchange, you have full ownership of the cryptocurrency and you can transfer it to a cold storage wallet or use it for trading purposes. 3. Varied acquisition fees. Unlike ETFs, Bitcoin direct purchase involves trading fees associated with buying and selling Bitcoin, which vary depending on the chosen exchange. 4. Self-managed. As the sole owner of the Bitcoin, you're responsible for its security and management, including the use of cold storage solutions. 5. Continuous trading. Cryptocurrency exchanges operate 24/7, allowing for unrestricted trading hours, even on weekends. Direct exposure to Bitcoin price. Now, unlike ETFs, there are no disparities between the Bitcoin price and its net asset value when purchasing Bitcoin directly. Sounding pretty rosy so far, right? Well, let's compare the pros with the cons real quick. Now, the pros of buying Bitcoin directly are full ownership. Direct buyers possess complete control over the Bitcoin they acquire. Self-custody. You can secure your investment through self-custody methods, enhancing its safety. Unlimited trading hours and lower fees. Cryptocurrency exchanges operate round the clock with relatively lower fees compared to some ETFs. The cons, however, include security challenges. Storing Bitcoin securely can be challenging, particularly for those lacking technical expertise. Exclusion from traditional plans. Bitcoin cannot be included in conventional retirement plans and 401k accounts. Not recognized as a financial instrument. Bitcoin is not recognized as a traditional financial instrument, which may deter some investors. So, what are your thoughts so far? Which way are you leaning? Are you a Bitcoin ETF buyer, or are you staying old school and you prefer the feel of possessing an actual Bitcoin? Well, when it comes to the choice, there's no right answer. If anything, now we just have a choice which we never had before, allowing the decision to come down to individual preferences and requirements in determining the superior option between a spot Bitcoin ETF and direct Bitcoin ownership. Because for investors lacking technical proficiency, uninterested in trading Bitcoin against other cryptocurrencies, seeking long-term exposure without the responsibility of safeguarding their assets, and willing to accept higher fees, an ETF might prove the better choice. On the other hand, those well-versed in the crypto space, desiring direct ownership of Bitcoin for secure cold storage or active trading against other altcoins, may find buying Bitcoin directly to be the ideal approach. In the end, the decision hinges on your unique investment goals and comfort level within the crypto landscape. There's no exact better or more profitable option. It's really dependent purely on your preference. Now, on one hand, you now have the convenience of an ETF, or on the other hand, you have the control of direct ownership. Both avenues offer opportunities to participate in the exciting world of Bitcoin investment. Now, guys, I truly hope this video helped you understand which direction you want to go in. And if you're not already, don't forget to subscribe to our channel for weekly content just like this. Otherwise, I'll see you in the next video.
None of the content in this channel should be considered as financial advice, and you shouldn't make investment decisions based on it. It's highly advisable to consult a professional before making any decisions that may or may not be based on the above content, as this is solely for entertainment purposes only.